I'm Tammy Green, and this is your Week in Forex from UFXBank. Today we will review last week's market highlights with financial analyst Martin Smith. Standard & Poor put their stamp of approval on the performance of the USD by ordaining that the greenback will continue to be the world's reserve currency. This gives promise and a big boost to the USD. Early elections in the UK appear to be bad news for the pound, while China is struggling to take control of the inflation that has been plaguing their economy. Now we will discuss these and other hot topics with Martin Smith. Welcome, Martin.
Thanks, Tammy.
There was an important statement released this week from Standard & Poor regarding the USD. Could you elaborate on this a little bit for us?
Yeah, this announcement was significant news for the greenback. Standard & Poor announced this week that the US dollar will continue its status as the world's reserve currency as long as the American financial markets are sound and government spending in the US is sustainable.
I mean, obviously the global recession has had a huge impact on the USD. But what was the reason that the primary reason that the status was questioned in the first place?
Well, in August of last year, Pacific Investment Management Company, which is the biggest manager of bond funds in the world, published a report signaling that the dollar's reserve status was in question due to the US government distributing a massive amount of money to stimulate growth in the suffering economy.
So what changed?
Well, even after this global recession, it became evident that the size of the American economy, along with the flexibility of their labor and product markets, supports the fact that the US dollar is the world's most accepted currency. S&P has made it clear that they view the US banking and capital markets to be dynamic and unfettered relative to their peers. And the US dollar gained, 4.9% this year? Only against the euro, which happens to be the biggest second destination for international reserves.
So let's move on to what's happening on the other side of the pond. How would elections in the United Kingdom, there's talk of early elections, how would this impact the pound?
Well, Prime Minister Gordon Brown announced last week that the budget announcement will come on March 24th. Now, this increases the prospect of elections being pushed earlier to May. Now, this has had an unnerving effect on this fragile currency, since it would create a high possibility of a hung parliament. Now, this is not good news for the pound, as it would create the perception that high levels of debt are crippling the economy, which may not come down speedily enough for a positive outlook for the global markets.
How is the pound actually performing right now in the market?
Well, price hesitation produced a hammer candle formation again after a similar pattern initiated a recovery. With our corrective consolidation scenario still in full force, a stab at higher prices may be seen on the back of this pattern. I'd keep a lookout for further upside gains towards 151.95. Conversely, supports are at the 148.71 level. Now, if it goes below the latter, it'll create an upside view, hold it, and then trigger it to resume its medium downtrend towards the 145.11 level.
Could you shed some light on what's actually going on in China right now with their inflation problem that they're facing?
Yeah, well, China has seen a sharp jump in inflation just during the last month. The government's feeling a lot of pressure to raise interest rates to all the Chinese currency to rise against the greenback. You see, consumer prices in China have risen by 2.7% from a year ago. Industrial production has also accelerated since the beginning of 2010 to 20.7%. All of these inflation reports came after a much bigger than expected jump in exports in February, and all of this is fueling the fire of hyperinflation risks, following the massive stimulus which was introduced into their economy last year.
Could you give us a few technicals that we should really keep our eye on this week in the Forex market?
Right, well, recent bearish price action on gold has prompted a correction back down to the long-term uptrend support line. The bearish correction occurs right after prices reached a high of around $1,145. The price is hovering right around the key trend line. In the event of a continued bearish momentum that breaks down below this trend line, currently around the 1,100 price region, prices could target a further downside support around the 170 price region. Now, this would potentially place the current long-term uptrend at considerable risk. In the event of a substantial upside bounce off of the trend line, a major upside price target within the context of a potentially continuing uptrend resides around the noted $1,145,000 high, and then the $1,160,000 price region.
Well, thank you, Martin. You gave us some really good tips for this week. Until next week, I'm Tammy, and be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can now follow us on Twitter and Facebook, or submit your own question to our weekly broadcasts by emailing Martin Smith at askthebroker@UFXBank.com.